What's up, everyone? So, welcome to the stream. As always, we are going to be covering the price movement at the moment and for BTC and why I feel that we might be actually, we might actually be going down for real this time. We look before anyone starts being a little bit upset and not and kind of not making enough yet. Let me just reiterate that it's a good thing. Okay, it's a good thing that we are now dropping in terms of value. It's okay. When I look at things holistically and in the time frame from where we were in the beginning of the year to where we are now, hey man, it really isn't too bad. In fact, this is what the market actually needs. We don't need another crazy parabolic movement of running all the way up to 15,000-20,000 in a matter of months. Really, it will not give anyone any time to breathe. And for whatever reason that Bitcoin is selling down, people will take profit all the time. And it doesn't matter, because I think right now, I think we also saw a recent article by Coinbase that yes, they have a total of 30 million users, but ever since Bitcoin peaked and started correcting, the user base has kind of slowed down. It's normalizing. People are being more rational. There's no real sense of urgency. Even when Bitcoin was at the low, which was the low of this year, by the way, and it is the all-time low for the past 2 years, right? It's okay, because you don't want the price to just go up drastically and no one gets a chance to react to it. There will be people who will want to buy at the next support level. Sure, were there people buying on the way up? Were there people who were, who probably bought at 13,000 or 11,000, hoping for it to continue to go up? There will be obviously a lot of panic selling, especially at the top, which is the new topish range from 11k to around 13k. That will be the panic sellers. So the people who are kind of caught at that point, right, because they kind of saw the market a little bit too late in that sense for this period, well, this episode perhaps is for you. So guys, Ivan, hey man, what's up? So we will now just go to the charts. Okay, so like why do I say that Bitcoin potentially could in fact, I kind of feel that Bitcoin would actually break the 9,784 or 9,800 level this time around, because okay, let's just put it this way. This is the daily, if you're wondering, this is the daily chart. And if you notice, right, it just couldn't, it retested the $11,000 mark 3 times. Okay, 3 times. And each time it just didn't want to go above. Volume was pretty significant in the closing in on the previous 2 attempts, but eventually it just gave in. And not only that, the current volume at the moment, this is on Bitfinex, by the way. So the current volume at the moment is pretty lackluster. So I anticipate that there will be further selling pressure rather than buying pressure. Sure, there could be supported levels that happen above 9,000. So that's always a good sign as well. As long as we hold above 9k, right? It's all good. But for now, it looks really very bearish. And it actually looks pretty much like how okay, let's just look at the 2017 period. If you look at the 2017 period, okay, it clearly shows that there was a very much similar spike come quick reversal. So here you have that similar spike, sell down, quick reversal, and then after that it looks pretty similar, guys, in terms of the way the candles are forming. So the whole point of helping you see this is you have to be prepared. You have to be prepared that we might see Bitcoin going back down, but we might not have that same drastic sell down. That means going back to 3k. We would probably have some level of support between the $7,000 to the $8,000 level, but for it to correct and just crash below 9,000 is not it's not ridiculous, okay? Because we still are within 2019, okay? And like I said, we went up way too fast. People are starting to realize that fundamentals have not entirely caught up. There's not much going on. Maybe BARC isn't as hyped up as people claim it to be, right? And when I think about it, yeah, sure. BARC is obviously owned by ICE. ICE is owned by the NASDAQ, so on and so forth, or at least part of the NASDAQ. Very credible, reputable institutions are going to be interested in starting using Bitcoin futures as a form of instrument for their existing investors or for their own personal fund management requirements, right? Custodial services, blah blah blah. We've heard that, we've done that. Wallet services, staking services. All these things are always in the pipelines. Nothing new. But what's lacking at the moment? The real general public interest, right? The real general public interest is no longer as hot as it used to. So we might be, we clearly are, by the way, still in the bear market region or the bear market period. And for folks like us who have we've been in it during the bear market, we've been in it during the bull market, then it's all good. We still will just be part of that space. There's no difference to me. I feel that right now it gives us the opportunity. In fact, it's a buying opportunity. Not now. If we see that Bitcoin starts really moving down aggressively in the next 2 to 3 weeks, then from then it will start to form a support. Once it forms a support, that's when you can look at, of course, buying more BTC and, of course, reallocating more funds into certain altcoins, right, that will help you to really propel yourself to a new level of wealth. That's kind of where my angle is going to be, right? So I look at it for the point that of course I exited at 5K, everybody knows that. But I don't, I didn't feel like, oh shit, that's it really. To me, I never felt that it was going to crazy levels. Okay, I didn't really care. And I didn't really panic. I sincerely didn't. You can ask any one of the guys, I really didn't care. But for me, I'm just like, I hope to see something more significant, something more exciting. Honestly, I cannot say that I'm very, very excited about the markets these days. I am not. I'm pretty much spending a lot of time with family. Pretty much spending a lot of time just, just asking myself, what does this space require in terms of developments? So when I look at it, when I looked at the top dApps, okay, or the dApps that are being built on the existing platforms, so EOS, Ethereum, Tron, Steam, and most of them are casinos, games, and financial related or exchanges. These kind of things are being built. So that's kind of like my thoughts, okay. And when I looked at it, I was like, okay, fine. There's all these things happening. And obviously, there are people who are wondering, like, how does that relate to the price movements and everything? It's still very speculative, right? When people, let's say there's a casino, a very successful casino app that is or dApp that is being built on, I don't know, EOS, Ethereum, or whatever. So obviously, people who want to use that casino, right, or speculate or have fun on that casino, they have to buy either Ethereum, EOS, or Tron. So maybe there's a certain level of demand, but when I look through the dApps, maybe I'll just go to it right now, so it's a little bit easier for everyone to visualize. So you can just go to this site, guys. It's called dApp.review, right? And then you click on the let me see. Is it the I think it's Explore. Yeah, okay. So you look at the Explore, right? So let's say you look at, I don't know, let's say you want to look at Tron, for example. So Tron has a whole list of exchanges. So you kind of want to see what's the more fast-moving things that are being built, right? And that helps in terms of the transactions. I don't think it helps. If it's a dApp, then definitely every single transaction that happens on these dApps will be considered as transactions as well on the network, right? It's not like when you perform a transaction within an exchange, or at least a centralized exchange. Because a centralized exchange, transactions will be too fast and it may clog up the network. So it's usually an off-chain thing when it comes to exchanges. But when it comes to exchanges, or at least transactions that happen, you want to see whether or not there are enough active users. So if you kind of take a glance on, let's say, Tron, and you see, oh, okay, there's this Tron bet. Okay, let's say it's Tron bet, Tron Casino. You want to click on it and you see that, oh, there's 3,899 users with a 24-hour transaction. You see, the reason why it's even recorded, right, is, the fastest thing is usually the casinos and the games, So if you look at it like, okay, so ETH is, a little bit more sophisticated. You have ETH finance related stuff. So you have, Kyber, have a decentralized exchange. You have, let's see, AirSwap, an ETH exchange as well. IDEX, it's an ETH exchange as well. But there are not many users. There's still just not many users to kind of create that FOMO of any sort. So perhaps, after a while, I was asking myself, okay, so there's another, kind of a popular one at the time was CryptoKitties, right? At the time, CryptoKitties was very, very popular, but now you see it's already dead already. It's like, 140 users with 3,298 transactions. That's like nothing, right? Then we have the very well marketed Gods Unchained, the trading card game that even I think one of my members actually was like buying the packs, because he has, quite a bit of Ethereum, so he just wanted to spend on, speculating on packs and even playing the game. Yeah, so stuff like this, stuff like this kind of, I'm starting to just, maybe I'm a little bit bored. So I just want to try to validate how do the tokens actually, just putting a price to it, just at least making some sense to it. So far, based on what I think is transactions, your community is split between two, right? Community will be investors and developers. So people who are developing obviously don't want to care too much about the price. They just want to know whether is this platform easy to use? Is it secure, right? And at the same time, can I perform what I need to perform or build what I need to build safely and securely, and it functions well? Okay, so obviously the code aspect has to be easy and everything. I'm not a developer, but I'm just thinking out loud here on if these are the things that developers would look out for, right? And at the same time, where's the incentive for me to build stuff on it? So there are folks who will look at it from an angle where, okay, blockchain is going to be something that I probably want to be versed in. Perhaps it'll be good for my future prospects on my resume. So they start building it because most of these platforms that we are discussing right now are open source. So all you have to do is just download, right, the program, and then you are able to start coding and creating your own things. And if you are able to market your dApp, and somehow it catches on within the community and it becomes successful, people will start using your platform, and you created something on the blockchain, right? You created something on the blockchain. Then you have the other side of the community, which folks like us, right? We invest, we put money, we make a lot of noise, but then we don't develop anything, guys. Like, we don't develop anything. All we do is make noise. Okay? All we do is make noise. We switch our jerseys, right? Because we like if this cryptocurrency does well, like, haha, I made money in this crypto. It's quite funny. So you made money in this cryptocurrency, like you're very, very faithful to that cryptocurrency. Then after that, if that cryptocurrency starts dumping, you will like comment and say, oh man, that's shit. I've been stuck in it for a very long time. It's not been doing anything. I hate it. I wish I had bet on something else. It's really funny, guys. When I just look at it, I'm like, okay, that's really how the space is. So I was joking in my group, my private group, and saying, guys, we should just have 100 different jerseys of the various smart contract protocols, and just have the different exchanges, to play safe. You buy a jersey of Huobi, you buy a jersey of Binance, you buy a jersey of OKX or KuCoin or whatever. So when you make money, right, you just put on the shirt, and then after that you just like, yeah, man, woo, like KuCoin forever or Huobi forever or whatever, man. So if you're a miner and you've been, or you have been a staker and you've got great gains from staking a particular coin, you also will be very, very you call it like excited and enthusiastic, and you're gonna be very, very supportive because you made so much money from this particular token, and just because you kind of spotted it. I think that's just how the investor mindset or speculator mindset works, right? So that being said, there is there is a level of community that everybody has to get involved. When developers look at people like us, right, they'll be like, wow, guys, you guys don't build shit. But then when investors look at developers, hey man, without our money, you can't build shit either. So it's really a two-pronged thing, you know. Then of course the company, right, the company that you are excited about, or the company itself, right, will want to see what angle do they want to progress to. Do they want to honor people who, because there's always two aspects, right? There will be the equity investors who have supported the company from the very beginning from a private level. That means nothing to do with tokens. Perhaps they may be given tokens, but they definitely have shares in the company, okay? So whatever progress that is being made, and any kind of future sale or acquisitions, obviously private investors who hold shares within the directors or private investors will always benefit for sure. Okay, they always benefit. Now, token holders are definitely at a higher risk. Why is that so? Because when you first put in your money, you are now participating in a pre-sale, for example. And from that pre-sale, there's an exchange of tokens. And with that exchange of tokens, that may or may not be deemed, it cannot be deemed as a security. Okay, firstly, it cannot be deemed as a security. Why is that so? Because BTC and Ethereum are not recognized legal tender. So because it's not recognized legal tender, most of the time, the funds are held in a so-called foundation. So as long as everything is held within the foundation, and it has a value that is within the community, and it doesn't get cashed out into fiat, there will be a certain, well, not a loophole, but I think when it gets cashed out into fiat, that's when the foundation has to pay taxes on that, because that's considered an income at that point. But if everything just remains as crypto, right? Crypto, apparently, right? And if you are, if developers are, really visionary enough to accept it as payment, and they go and settle and they go and exchange it into fiat on their own, then it becomes a tax on that level. But most of the time, as far as I know, not every company functions that way. Everyone will cash out and then start hiring the talent. No one likes the volatility in crypto, guys. Nobody, really nobody. Okay, and when you come in and you start building stuff on it, naturally it all costs money. So when I look at the space as a whole, how many companies are really truly left that have a war chest? So that's why I went down to it and I said, wow, unfortunately there are not many. There are not many that raised enough. So hence you have your Trons, your Tron, you have your EOS, you have your Ethereum, you have your smart contract protocols or smart contract platforms that can honestly transition to become anything they want. They really can transition in any way they want. Naturally, it all boils down to what kind of internal governance they have. Is it easy to implement things without too much of a hassle? And I think whenever you have too many forks, it also affects the development. Really, let's just put it this way. If you are someone who you always consistently change your directions and ideas all the time, or somehow your directions are being influenced by the community all the time, then it becomes very difficult to have a clear direction, because, oh my goodness, now my community is split. And when they are not happy, they do this. So there's always that infighting element when it comes to a open source. Everybody has a say in that sense, and eventually, of course, there will be a majority winning chain. So as you can see, from the Bitcoin to Bitcoin Cash to Bitcoin SV and that whole saga there, who's gonna win? Everybody's very unclear. Everybody's truly very unclear. And that's the part where I didn't want to get my hands dirty, when it came to that. I didn't want to get involved, because everybody knows I don't like the politics when it comes to this kind of stuff. I just want to make sure that, okay, if I put my money into something, right, I don't want the company to have so many different directions and so many. Everybody wants to be the top hit in that sense, right? So that being said, I said, you know what? I just want to be simple and a stupid investor, if you want to put it that way. And I bet on the companies that have one leader, or at least everyone thinks in that same direction. No one's going to question no one's going to question all the time, and they just move in unison. So Binance, Huobi, they're doing that. And there are going to be cryptocurrency projects that are also going to perform in such a manner where they are going to just have one direction. They're going to have in a way, less maybe no forks at all, or maybe forks that don't require, and it's not disruptive to development. So I wanna see, and I wanna bet. Okay, I wanna bet on these kind of companies. Okay, and it's just simpler to understand. Because I know we're going to be here a while, guys. We're going to be here a long time. We're going to just be here for a number of years. I don't want to have the hassle anymore. I just don't want to, be too involved in the drama, if there is, right? If there is. So it's all about that kind of information that allows us to continue to make money, right? You just want to keep it simple. And if you're not building anything, right, you can't really comment too much. You just look at things from a holistic standpoint, and you try to have public information. Like, for example, the website that I just showed you is public information. And I realized that when transactions are moving a little bit, or at least progressing, or at least increasing, I do notice that the price also goes up. So that's one. And it depends on why these transactions are taking place. So there has to be a staking element. Okay, so that's the next part I want to talk about. The staking element is pretty important because everybody likes to be lazy, guys. And as validators, okay, and especially if you are someone who is, whether you're doing staking, you know that you're playing some form of, you're a validator, you're a node, whether you are a small node, you're part of a delegated proof of stake, you are you are the baker or whatever, right? You serve a purpose, and you want to be rewarded for dedicating the amount of money or the amount of power or both to help this network perform in such a way, right? You want it to be decentralized, you wanted it to be more secure. I am one of the nodes, right? It's the same like how Libra, right, requires or at least wants to have nodes that are 10 million each. You see? It's a monetary commitment, and at the same time there's going to be a monetary reward. And as long as that token has a strong enough value, or at least market value, staking is not such a bad idea, right? There are cryptocurrencies that are paying out every month, right? Those I feel are very high risk. But there are cryptocurrencies that are paying out, anywhere from 5 to 7, 8, 9% per annum, which is also very decent when you think about it. Because when you look at it from a long-term perspective, and if you just decide to stake on certain coins, and I know some of you have been staking. I personally don't stake because I like that flexibility, because I feel that flex is best, where you are able to move in and out. Because I did try to do staking at some point, but I just felt that, hey man, if I just moved along when there was enough volume and pumps, I actually did better than the staking. Because after all, most of the cryptocurrencies that I am in pay a per annum basis, and I definitely can outperform the staking rewards. Okay, that's just me. But it doesn't mean that you may do the same thing, or you have the time to want to bother to trade. Maybe you just want to put it into the wallet, right, and just let it do its thing, and you can do that as well. So you see, there's no one size fits all strategy, and I don't want to. I'm no longer the guy that talks down about a particular project or whatever. Like I said, I don't anymore. I'm very neutral. Like if I see folks who comment about a particular cryptocurrency, right, I'm not gonna shoot them down and say, hey man, this doesn't work or whatever, right? I just look at things from a very general perspective. For example, if you tell me that you made a certain percentage on a coin, I'm like, okay, that kind of catches my attention. But when I look at where the coin is, right, and the volume that goes into it, it may not make sense to me, because maybe the volume was just like $10,000 or $20,000. But yeah, maybe for you, when you discovered it, you put in a $50, and that $50 became 4,000%, which is pretty awesome, right? But we want to look at things from a sustainable standpoint, that we need to identify. You can't always look at putting in $50, because eventually when your portfolio grows, you are looking at things that are on a slower growth basis, well, at least slower when it comes down to other existing financial assets, and you want to make sure that they are safe. You don't always want them to drop in value suddenly, and you always have to take action, guys. I don't see that as something that anybody wants, right? If we're going to have fund managers starting to look at the companies and the projects, why do you think Barry Silbert from Digital Currency Group, okay, DCG, okay, this Digital Currency Group, he created a fund around Ethereum. He created a fund around Bitcoin. No, he created a fund around Ethereum Classic. He created a fund around Bitcoin. So all these things, right? Yes, there is a certain amount of volatility, especially right now when our market cap is below 280 billion, and we will continue to have this kind of volatility until we really hit the 1 trillion and above. We were not gonna have a easier time now till then. So now till then is just about, we're going to bring back the term strong hands, the hodl terms, right? And will we experience a full altcoin season? I doubt that. I really doubt the altcoin season will ever happen again. I feel that the alts that are the strongest in terms of fundamentals, marketing, talent, community will do the best. And we're talking about real community, not the fake shit of bots being dropped into the Telegram group and all that. Anyway, that is really passé already. Very, very few companies even take that angle anymore. And that's something good. It really kind of cleaned up. It happened very quickly, but it also cleaned up very quickly. So that's a good thing. So right now it's just more of who's left. People like us, people who are still pretty much vested. We are more mature. We are bored to a certain extent, and that's good. That's good as well, because when you're bored, right, you look at things with clarity. You're not going to be emotionally involved anymore. You're just going to be like, okay, it's just a normal day, right? Oh, this happens. We are used to it. This thing drops 15%. This thing drops 20%. It goes up 20%. We are okay. We know exactly what to do. So it's like a walk in the park already. You know what I mean? So it's like when you have your first kid, and when your first kid has the fever, you're like, oh shit, this is bad, like he's starting to break out in rashes. Then the second kid comes along, same thing happens. You are just like, oh, it's just a viral fever, viral rash. Let's give it a day and see whether the situation improves. Is the fella is still running around? He's still all good. Okay, then all good. You see, the difference is just that you have experience now. That's all. That's all you need, guys. And with this dip that potentially could happen, just ask yourself, are you okay to just buy in more? And then just have a longer term time frame. Don't have that unrealistic time frame. I think a lot of people get caught because they need to pay off for something, and it didn't happen within their time horizon, which is usually very unrealistic. Okay, and those are the people that really are gambling, right? They really get hurt the most when it doesn't turn out. Yeah, that's what I really can see. Like, it has happened over and over. It's always about the time horizon, right? Why people usually just fail in a lot of aspects is because firstly, they didn't budget properly, and maybe they spent way too much too quickly or committed way too much too quickly at the beginning, and they had a very unrealistic time horizon in their head. And when you just have everything go out at one go, financial resources of course, and it didn't turn out, then that emotional panic sinks in, because we know that cryptocurrencies can drop 20-30% over a matter of days, right? And when you see your 5-figure portfolio or your 6-figure portfolio just suddenly get wiped out in a matter of days, right? We're talking about 20-30% is really no joke, guys. It really can be very nerve-wracking, especially to people who have never experienced this before. But if you kind of go in with a very gradual and a very systematic mindset, right, you are gonna be okay. You're really gonna be okay. I don't really feel that you would ever panic, because your commitment level is very consistent. If I committed $1,000 today, and Bitcoin is at 9,880, fine. Okay, I'm done for that particular contribution period. The next month, okay, Bitcoin is 7,000. Sure, I lost 20-30% on that initial $1,000, which becomes $700 at the moment. But I'm now able to put in another $1,000 at the $7,000 mark, and it kind of averages out the price. You kind of see how simple that is. So over a certain time frame, right, you will just get it right at some point. You don't have to get it right at that point, but you just have to get it right eventually. You see? So yeah, so guys, I mean the video isn't that, oh wow, okay. The video isn't that that complex if you think about it, but I'm helping people rationalize. And right now we don't have the masses in yet. That means the masses who are planning to come in, right? They don't know about this space. They really don't, guys. You look at it, right? It's not the new people. Very few new people are in this space, man. I see the group or the people that are here, right? They are the same folks that have always been watching my content, okay? And maybe some new folks. So welcome, new folks. And if you're new, it is a great opportunity for you to start allocating or accumulating, because it is a new market for you, okay? Obviously, you're not buying at the all-time low, but you're definitely still somewhere there. All right, guys. So anyway, that is all for the video. I hope that you guys are gonna stay vigilant and at the same time hungry for information, but be calm, and just think things on a very level-headed playing field, and just strategize how your portfolio is gonna be. Where do you see yourself in the next 5-10 years? If you really made it for this particular asset class, and what are you gonna do with the money when you do? These are the things that you want to think of. Think 3 years, 5 years, 10 years, you'll be really fine. All right, guys. Thank you so much for watching, and see you in the next live stream.